Let's bring on board then Vipul Prasad, who joins in with his fundamental take. And why do you say, Vipul, that one should not get carried away by the run-up? Is that an indication that now we'll be putting the brakes on the rally?
I would not say that we are going to see a big hiccup in this rally, or maybe I'm not even saying that in the near term we will necessarily see a correction. What we are saying is that this March rebound in the market has largely been driven by a re-rating of the multiples, PE multiples, which in turn has been driven by ample liquidity, sharp improvement rather in equity, and also regarding increased expectations around political continuity post the elections. So to me it looks like a more broad-based and more fundamentally driven rally has to be on the back only of earnings revival that has long been overdue, and that has been elusive for the last 3-4 years. Now the question is, are we going to see the same trend of continuing disappointment on earnings? I suspect no, maybe another 2 quarters or so, and after that we have clear indicators the earnings should improve from there. So that will be where the real rally again should resume. I'm not saying it'll be a fresh bull market or something, it'll just be a continuation in this bull market, but after this pause. So that's how I'm looking at the markets right now. In fact, one more thing worth highlighting here, that I am not getting too worked up about the global factors, especially some people are kind of concerned about an upcoming recession in the US. So that also is not too worrisome from India perspective in my view, and in any case just because there is a slowdown that is impending, it doesn't mean that it necessarily has to convert into a full-blown recession. So right. That's the way I'm looking at it, yeah.
That markets are being chased by liquidity, factoring in a positive earnings growth. What is the sense that you get in terms of earnings? Someday earnings will come. I mean, base is low. Don't you think earnings growth is just around the corner? Maybe not this quarter, the next quarter?
To be on the safer side, I'll still say that once the elections are over, especially on the consumption side, we'll have to wait for a couple of quarters, because as the debate has really got escalated around rural distress and around job losses, actually this has become a kind of vicious cycle also. So people would have lost confidence around their own future, because of which, if you're seeing some of the consumer staple companies also have been saying that this quarter has not been too great, and till December actually volume growth had been quite good for all these consumer staple companies. And also look at the auto numbers. So in last 3, 4, 5 months this has happened. So once the elections are over, once this debate moves away from the center stage, so again some amount of consumption should improve, and also that cyclicality also won't work immediately. So we are waiting for some sort of a cyclical reversion in all these high frequency data, for example autos or real estate volumes, or even in appliance volumes. So I would say that probably one can be more confident when one is saying that probably in the second half of fiscal 20 when this should start.
Vipul, what is the sense you get about banking names? Do you think private banks in India are the best place to own despite the run-up?
Yeah, I do think banking as a sector, I would say, as a sector as in like not just private banking but also public sector banks. But again, one has to be very selective. Some of the larger ones, some of the market leaders are looking very good despite the run-up. And for example, if you are talking about something like an Axis Bank, ICICI Bank, they have done phenomenally of late. But even then, if one can take a slightly longer term view, 1.5, 2 years, then many of them are looking very good. Even HDFC Bank looks superb. SBI is coming out of kind of a sick bay. So things are improving very fast now. And even then, when I'm talking about SBI, actually the valuations are looking very attractive even after the recent run-up, and the way things are shaping up, in fact their strength on CASA ratio, their strength in retail, or the pace of improvement of their loan book, all these things are looking indicating to a very good future for the SBI stock from here.
Vipul, what within the mid-caps are you finding as an opportunity to invest in?
So as a group on mid caps and small caps, we still think one has to be very, very conscious of the kind of stocks that one is getting into. But at the same time, I do agree that in the next 2 years, from a next 2 year perspective, some of these stocks are looking very interesting. It's very important to start with a filter of corporate governance and of balance sheet, especially for these stocks. And beyond that, when we are taking exposure into such names, we are also looking at the visibility on their earnings growth and also about the return ratios. How has it been in the last 2-3 years, and if there's a scope for improvement from there. So some of the names that we are looking at, for example, in fact, these are stocks like say Bharat Electronics or something in the small cap space, something like an HIL, Hyderabad Industries Limited, or a KEI Industries. So some of them are also linked to some sectors which may be driven by the government's thrust on these sectors. For example, power has been one sector where the government has been really pushing a lot of emphasis, and now that we are seeing further developments on the ground, some of these companies can do it. KEI Industry is one such company. Similarly, the affordable housing segment, HIL is very closely linked to that segment, and the company is very well run company, very strong balance sheet, strong return ratios. 2 years ago they were struggling because of issues at the ground level, because this sector itself was not doing too well, but from here next 2-3 years they are looking very interesting. So but again, as I said, one has to be very conscious of the kind of companies that one is taking exposure in these sectors.
Vipul, your top IT bets?
Actually, IT we are keeping away. We feel that the stocks have done very well with good reasons, but now they're looking a bit stretched, especially given the fact that rupee is not showing signs of further depreciation. In fact, it is appreciated, and US and European markets continue. In fact, they're looking down in terms of their economic growth. So in terms of EPS growth, probably it's difficult to expect more than in a range of say between 10 to 15%, and with the stocks are trading around 20 times, many of them 18-20 times. So probably if I have to take defensive exposure, I'll rather look at consumer staples, some of those stocks in FMCG sector.
Do you have any names?
Yeah, for example, Britannia looks good to us, Dabur looks good to us. So basically they are both driven by premiumization of their product range, and also because of very clear opportunities geographically as well as product positioning wise, wherein they can do further better. And also premiumization and cost control is also helping them in terms of their margin enhancement further incrementally from here. So looks like 15 to 20% growth is something that we can expect with high visibility over the next 3-4 years. So in that sense, even though their valuations are slightly on the higher side, I would still think that these stocks can do well over the next say 1.5-2 years.
All right, Vipul, let you go on that note. Thanks for joining in and sharing with us your thoughts on the markets. Have a good weekend.